Welcome to Mind Over Markets, where trading meets psychology, where fear meets awareness, where every chart becomes a mirror and every moment becomes a lesson. This isn't a channel about chasing profits. It's about mastering yourself. Because the greatest edge in the market is not your strategy. It's your state of mind. Here we don't talk about hype, we talk about presence. We don't escape fear, we study it. We don't fight emotion, we understand it. If you're ready to trade with clarity, to think in probabilities, and to find calm in the middle of chaos, you're in the right place. Take a deep breath. Let's begin. Have you ever felt your heart race when the market moved closer to your short strike? That quiet panic when you realize you might get assigned. Your brain tells you, I have to do something right now. And in that moment, you stop being a trader and start being a survivor. Fear takes over. Logic fades. You start clicking buttons trying to escape from a feeling, not a trade. This is the story of every trader who's ever been caught in the emotional storm of fear of assignment. It's not just about money, it's about control. When we open a spread, maybe a credit spread on the SPY or a put spread on Tesla, we tell ourselves we're being rational. We've calculated the probabilities, we've looked at the Greeks, we've checked the expiration date, but none of that matters when your brain whispers you're about to lose everything. Assignment. That one word can turn a calm professional into a frantic amateur. But here's the truth. Most traders aren't afraid of assignment itself. They're afraid of not knowing what will happen next. They imagine worst-case scenarios. Will my account go negative? Will I be forced to buy shares I can't afford? Will this ruin my capital? And in that moment, the brain stops processing facts and starts fabricating fears. The fear of assignment isn't about the market. It's about uncertainty. It's about the story your mind tells when it loses clarity. You see, assignment isn't chaos. It's a process, a mechanism. It follows rules. It's predictable. But fear doesn't care about that. Fear doesn't analyze the OCC rulebook. Fear just wants safety now. And so you close the spread too early. You take unnecessary losses. You break your plan just to end the anxiety. And when the market reverses and your spread would have expired safely, you stare at the chart in silence, feeling both relief and regret. That's not trading. That's emotional relief management. There's a reason this happens. When risk feels imminent, your nervous system triggers the fight or flight response. Adrenaline floods your bloodstream. Your prefrontal cortex, the part responsible for logic and analysis, goes partially offline. You start scanning for danger, not opportunity. The charts blur, your breathing shortens, every tick feels personal, and suddenly you're not following probabilities anymore, you're following panic. This is the moment every serious trader must face the crossroad between fear and awareness. Do you act from the urge to escape discomfort, or do you pause long enough to separate emotion from logic? That pause, that single breath of awareness, is where trading psychology begins. The calm rule isn't about ignoring fear. It's about understanding it. It's about training your mind to recognize when fear is speaking louder than facts. Because fear screams, logic whispers, and the professional learns to listen to the whisper. Let me tell you something most traders never realize. Fear of assignment is not a trading problem. It's a trust problem. You don't trust the system you built. You don't trust the math behind the spread. You don't trust yourself to stay calm when volatility spikes. So you overreact. You hedge too early. You close positions prematurely. You call it risk management. But deep down, it's emotional management. True calm doesn't come from eliminating risk. It comes from understanding it deeply enough that it no longer surprises you. Think about it. If you truly understood assignment, if you knew exactly what would happen to your account, your margin, your position, would you still be afraid? Probably not. You'd see it for what it is, just another event in the chain of probabilities. Fear thrives in uncertainty. Knowledge kills fear, but awareness transforms it. When I coach traders, I ask one question. When you feel that panic, what are you really trying to protect? Most of the time, it's not the money. It's the self-image, the idea that you should always be in control, that you should never be wrong. But trading doesn't care about your ego. It only cares about your process. You can't control the market. You can't control assignment. You can only control your behavior when both are out of your hands. That's what separates the professional from the emotional. If you close your eyes right now and imagine that moment, the market moving fast, your spread deep in the money, can you feel the tension in your chest? That's not market pressure. That's psychological attachment. You've attached your self-worth to the outcome of a single trade. And the moment you do that, you've already lost clarity. The calm trader learns to detach, not by being emotionless, but by being aware of emotion. They don't eliminate fear. They observe it. They name it. They understand its function. Fear is information. It's telling you something about your perception, not the market. So instead of reacting to fear, they ask, what is this emotion trying to tell me right now? That question changes everything. Because in that moment of awareness, you shift from being inside the fear to watching it. And when you watch fear, you begin to see how it manipulates you. You see the pattern, panic, reaction, regret, self-doubt. Then the cycle repeats. Breaking that cycle is not about better entries or exits. It's about learning to pause when your nervous system demands you act. That pause is your edge. And that's where the calm rule begins. It's not a trick. It's not a hack. It's a discipline of mind. The calm rule says pause before you act. Process before you decide. Trust before you close. It's simple, but not easy. Because your body wants instant relief. Your brain wants closure. Your ego wants control. But your trading success, it wants patience. The calm rule is what separates those who trade probabilities from those who trade emotions. It's the thin line between panic selling and strategic management, between reacting and responding, between surviving the trade and mastering yourself. In the next part, we'll go deeper into that mechanism, how your brain's loss aversion and confirmation bias distort your perception of risk, and how you can reframe assignment from a threat into just another outcome within the plan. But for now, remember this. You don't need to eliminate fear. You just need to learn how to stay calm when it visits. Because calm is not the absence of fear. It's the mastery of awareness. Fear doesn't arrive as a loud explosion. It creeps in quietly like a whisper behind your thoughts. It starts with a small what if. What if I get assigned? What if the stock gaps overnight? What if this time it's different? That whisper grows louder. And before you know it, you've built a story in your head, a movie of loss and regret that hasn't even happened yet. That's the mind's trap. It makes you feel the pain of something that's not real until it becomes real through your reaction. In trading psychology, we call this loss aversion. The idea that the pain of losing feels about twice as strong as the joy of winning. So even when your probabilities are good, your system's solid, and your spread still statistically safe, your emotional brain says this pain is coming, get out before it arrives. You exit the trade not because the data told you to, but because your nervous system demanded it. You're no longer managing a position. You're managing discomfort. The human brain is built for survival, not profit. In ancient times, it helped us run from predators, avoid poisonous berries, stay alive. Today, it's still doing the same thing, but the predator is a red candle on your screen. The danger is imaginary, yet your body reacts as if it's real. Your pupils narrow, your muscles tense. You hold your breath without noticing. That physical state, it's the physiology of fear, and you can't think clearly while your body believes it's under attack. Then comes the second trap, confirmation bias. Once you're afraid, your brain starts looking for evidence to justify that fear. You see a headline, volatility spikes ahead of earnings, and your mind says, see, I knew it. You read a forum post someone just got assigned early, and your mind whispers, it's happening. Every new data point becomes proof of your worst assumption. And what you don't realize is that your perception has narrowed. You're no longer seeing the market, you're seeing your fear reflected in it. Fear distorts probabilities. It changes how we weigh risk and reward. When you're calm, you think in percentages. When you're afraid, you think in absolutes. Everything becomes binary, safe or dangerous, win or lose, success or failure. But trading isn't binary. It's probabilistic. You can be right and lose money. You can be wrong and still profit. That's the paradox that destroys most traders. They can't emotionally tolerate uncertainty. Then comes the third trap, catastrophic thinking. It's the brain's way of jumping straight to the worst-case scenario. Assignment doesn't just mean you'll hold shares overnight. In your mind, it means this will blow up my account. I'll lose months of progress. I'll be stuck helpless, embarrassed. The moment you believe that story, you start trading to avoid embarrassment, not to manage probability. Your emotional brain doesn't distinguish between humiliation and financial loss. They both feel like threats to identity. And once your identity is on the line, you can't make rational decisions anymore. This is why the best traders aren't the smartest. They're the calmest. Because calm gives you space between the market and your reaction. That space, that tiny gap, is where you reclaim your power. You can't stop fear from arising, but you can stop it from making decisions for you. Let's go deeper. What happens internally when you feel that sudden spike of fear? Your amygdala fires the brain's emotional alarm system. It sends a signal that something's wrong. That signal floods your body with adrenaline, and your conscious mind, the one you use to analyze deltas, probabilities, and risk-to-reward ratios, gets overridden. You're now operating on instinct, not intention. Your focus narrows. You start scanning your position, obsessively refreshing the screen, checking P&L every few seconds. That behavior isn't rational analysis. It's anxiety-seeking reassurance. You're no longer a trader. You're an emotional regulator trying to calm yourself through action. The irony is that this behavior feels productive. It feels like you're doing something. But in reality, you're reinforcing the fear loop. Each time you react impulsively to reduce anxiety, you train your brain that panic works. And it will use that same tactic next time even faster. You've rewarded fear with action. And whatever you reward grows. So how do you break the loop? You start by acknowledging that fear is a signal, not an order. When fear rises, you don't have to obey it. You observe it. You name it. You breathe through it. You remind yourself, this is just my body reacting to uncertainty, not reality. That awareness shifts everything. Because once you see fear as information, you stop treating it as an enemy. And that's where discipline begins. Discipline isn't willpower. It's awareness under pressure. Anyone can follow a plan when the market's quiet. But when volatility hits, your discipline is tested. That's when you meet your real self. Are you the trader who acts from panic, or the one who pauses, breathes, and reevaluates before making a move? That moment defines your edge. Trading psychology isn't about never feeling fear. It's about recognizing that fear is a natural part of exposure. When you trade options, you're trading probabilities of outcomes. Assignment is one of them. It's not a failure. It's just a possible result. But if you treat that possibility as disaster, you'll sabotage your edge long before it happens. Because fear doesn't wait for losses. it creates them. The professional trader accepts fear as part of the process. They use it as feedback. They measure it. They learn from it. They know that fear unmanaged becomes bias, but fear observed becomes data. And the more data you have about yourself, the better you can manage your system. Because trading isn't just numbers on a screen. It's you, your thoughts, your patience, your capacity to stay centered when the market tests you. So when you feel that surge of panic, the "I have to get out now" moment, stop. Ask yourself, what exactly am I afraid of? Then answer it with specifics, not feelings, facts. Fear hates specifics. It feeds on vagueness. The moment you define what scares you, you start to regain control. Maybe you'll realize you're not afraid of assignment itself. You're afraid of not understanding it. Or you're afraid of losing face, or of being stuck in a position overnight. Once you know the source, you can work with it, because clarity dissolves anxiety. Confusion multiplies it. The calm rule begins here, not in the market, but in your own awareness. In the next part, we'll explore how to reframe assignment, how to transform it from a terrifying unknown into a neutral event within your system. You'll learn how professionals use structure, routine, and predefined responses to stay calm when the unexpected happens. Because fear doesn't vanish through knowledge alone. It fades when you've trained your mind to remain centered, no matter what the market delivers. Calm is not something you find. It's something you build. Every trader wants peace of mind, but few are willing to train for it. They study charts, indicators, probabilities, but they never study themselves. They forget that the market doesn't move them, their perception does. And when perception is reactive, every tick feels like a threat. The calm rule begins when you learn to slow down the moment between stimulus and response. That space between what happens and what you do is where your power lives. It sounds simple, but it's the hardest habit in trading. Because your nervous system is wired for immediacy. You see red, you act. You feel fear, you flee. But every professional you admire has trained that reflex into awareness. They've turned reactivity into reflection. They've built emotional muscle memory. The calm rule has 3 parts: stop, process, trust. It's not a mantra. It's a mental framework, a way to stabilize your mind when uncertainty spikes. Let's start with the first one. 1, stop. When the chart moves against you, your body reacts before your mind does. So the first step is not analysis, it's interruption. Stop. Stop clicking. Stop refreshing. Stop reacting. Breathe once deeply and remind yourself the trade hasn't ended. Only your patience has. The goal of stop is to break the automatic chain of fear, action, regret. You don't need to fix anything in that moment. You just need to pause long enough for logic to return. That's all. Calm is a pause between impulse and intention. 2, process. Once you've stopped the reaction, you begin to process the reality. Ask clear, grounding questions. What's actually happening right now? What is the probability that this ends in assignment? If it does, what's the real impact? These questions bring you back to data, not drama. Fear exaggerates. Facts clarify. Processing means checking your plan, not your feelings. It means revisiting your position's logic, your margin requirements, your maximum loss. Most of the time you'll realize the situation isn't as dangerous as your brain insists. Your spread is defined. Your exposure is limited. Your emotional volatility is the only thing that's unhedged. Process is where you return to the framework you built before the chaos. Because in trading, you don't rise to your goals. You fall to your level of preparation. 3, trust. This is the hardest part. After you've stopped and processed, you must trust the plan you built in calm. That's what separates experience from emotion. Anyone can follow a system when it's easy, but only the disciplined trust it when fear whispers otherwise. Trust means surrendering to probability. It means accepting that you can't control outcomes, only process. It means remembering that assignment, if it happens, is just the market doing what it does, neutral, not personal. Trust is the bridge between knowledge and confidence, because knowing what to do isn't enough. You have to believe in it when everything in your body says, run. When you combine these three: stop, process, trust, you're not avoiding fear. You're transforming it. You're teaching your mind that calm is not the absence of chaos, but the mastery of it. And each time you practice this rule, your brain rewires itself. Neural pathways that once fired with panic begin to associate volatility with curiosity, assignment with opportunity, loss with learning. That's how calm becomes instinct. You might ask, how do I train this? The answer isn't found in the market, it's found in reflection. Every time you exit a trade journal, the emotion, not just the outcome. Ask yourself, what was I feeling when I clicked that button? Was that fear, frustration, or clarity over time? You'll see patterns. You'll realize that your biggest losses didn't come from bad analysis. They came from bad timing, driven by emotional impulse. That awareness is priceless, because once you can name the emotion, you can predict it. And once you can predict it, you can manage it. The calm rule is not a technique. It's a lifestyle of awareness. It's how professionals approach the market: slow, deliberate, detached. They don't chase relief, they pursue clarity. When they feel fear, they don't fight it. They breathe into it, they let it pass, because fear is a wave, and waves only have power when you resist them. The moment you stop resisting fear, it loses its grip. You realize that every emotion is just energy, energy that can be redirected into focus, patience, discipline. The trader who masters calm doesn't suppress emotion. They integrate it. They learn to trade with it, not against it. Fear becomes data. Uncertainty becomes teacher. Volatility becomes mirror. Think about this. When you fear assignment, what you're really afraid of is an outcome that doesn't fit your comfort zone. But discomfort is the birthplace of growth. Every trader who's achieved consistency has walked through that discomfort again and again until it became normal. They've learned that calm is not given by the market. It's earned through exposure, exposure to volatility, exposure to loss, exposure to the unknown. And in that exposure, they discovered something profound. Fear doesn't disappear when you get better. It disappears when you stop needing control. The market is unpredictable, but your response doesn't have to be. Every moment you remain calm when others panic, you're widening your edge. Because the market rewards awareness, not emotion. It rewards process, not perfection. And the deeper your calm, the sharper your execution. So the next time your spread moves against you, remember the calm rule. Stop, process, trust. Let it echo in your mind like a mantra when the screen turns red. Because that pause, that breath, that act of inner stillness, that's where mastery lives. You can't control the market, but you can always control who you become in it. And when you master that assignment, stops being something to fear and becomes something you simply handle. In the next part, we'll go deeper into the mindset of probabilities, how to detach from single trade outcomes, and train your brain to think like a risk manager, not a fortune teller. Because calm is the doorway, but probability, that's the path to freedom. Most traders say they understand probabilities, but few think in probabilities, and almost none feel them. Because understanding is intellectual. Feeling it, that's psychological mastery. The real challenge isn't knowing that a spread has an 80% chance of success. It's staying calm when you're inside the 20%. That's where the market tests not your strategy, but your identity. Every trade is a mirror. It reflects what you believe about control, about risk, about yourself. When you lose, it doesn't just hurt your account, it challenges your sense of competence. That's why traders overreact. They don't want to be wrong. They want to feel safe. But safety doesn't exist in trading. Only probability does. The professionals, they don't chase certainty. They chase expectancy. They don't ask, will this trade win? They ask, does this setup have a positive edge over time? That shift in question is the beginning of emotional freedom. Because when you think in probabilities, you stop needing to be right and start focusing on being consistent. Think about that. Every losing trade is not a personal failure. It's a statistical necessity. If your system has an 80% win rate, you need 20% of trades to lose, so the math can stay balanced. Yet most traders panic the moment they enter the losing 20%. They close too early, they hedge out of fear, they rewrite their plan mid-trade, not realizing that they're destroying the very probabilities they claim to trust. When you think probabilistically, losses stop feeling like threats and start feeling like data. You stop saying, I lost. You start saying, this outcome fell within expectation. That's the shift, from emotional trading to mathematical composure. But to think that way, you need to retrain the language in your mind, because the words you use determine how you feel. Most traders speak in absolutes. This is risky. This is safe. I can't afford to lose. But professionals speak in ranges. This setup has 65% probability. This outcome sits within expected variance. This drawdown is part of the plan. They don't assign morality to outcomes. They assign probability. And that single shift in language changes everything about your emotional state. Let me tell you something rarely discussed. When you attach your self-worth to the outcome of a single trade, you create a psychological debt. Every loss feels like punishment. Every win feels like validation. You're no longer trading markets, you're trading your self-esteem. That's why you chase losses. That's why you revenge trade. That's why you over-leverage after a losing streak. You're trying to repair identity through performance, but identity built on outcomes will always crumble under volatility. The mindset of probabilities requires emotional separation, not detachment from caring, but detachment from identification. You care deeply about execution, but not about outcome. You care about following process, not about proving yourself. You don't measure success by a single trade, but by the consistency of your discipline. You don't ask, did I win? You ask, did I follow my edge? That's how you stay free. Freedom in trading is not about unlimited profits. It's about emotional neutrality. When you're neutral, you can see clearly. You can act rationally. You can let probabilities unfold without interference. Neutrality doesn't mean apathy. It means balance. It means staying centered whether you win or lose. Because both are feedback, neither is identity. And here's the paradox most traders miss. You can't control outcomes, but you can control the sample size. The more consistent your actions, the faster probabilities reveal their truth. The impatient trader never sees their edge play out because they quit before math has time to deliver. The calm trader stays long enough for the edge to work. That's the game. Not predicting the next candle, but surviving long enough to let probabilities pay you. It's like flipping a coin. If you flip it 10 times, you might get 7 heads, 3 tails. Flip it 1,000 times, you'll land near 50-50. The market works the same way. But emotionally, traders live in the 10-flip mindset. They overreact to short-term variance and sabotage long-term expectancy. The professional lives in the 1,000-flip mindset. They accept randomness in the short run and focus on execution over time. That's what makes them powerful. When you internalize this truth, fear loses its meaning because you realize there is no single trade that defines you. There's only a collection of exposures executed with consistency guided by a system. The edge isn't in the setup, it's in the stability of your mind when the setup plays out. Assignment volatility drawdown. None of these are enemies. They're just variables in the equation of probability. And your job isn't to control the variables, it's to control the self. Because probability doesn't bend to emotion, but emotion bends your perception of probability. And perception is where most traders lose. So how do you live this mindset daily? You train yourself to see beyond the moment. When a trade goes red, you don't ask, why me? You ask, where does this fit in my distribution? When you feel anxious, you remind yourself, this is one event in 1,000. That's how professionals stay calm. They zoom out mentally and emotionally. They see trades as dots in a much larger picture. Zoom out far enough and fear disappears into context. You begin to realize you're not trying to win today. You're trying to win across time. Each trade is just a vote in the direction of your process. A single loss means nothing when you've built 1,000 votes based on discipline. That's what makes consistency a superpower. And when you live with that awareness, something shifts inside you. You stop chasing trades. You stop forcing setups. You start letting the market come to you. You become patient, measured, intentional. Your identity as a trader is no longer tied to outcome. It's tied to executional integrity. You trust yourself because you've proven you can stay calm when the market tests you. That's what mastery feels like. The mindset of probabilities is not about optimism. It's about realism. It's not about believing you'll win. It's about accepting that you can lose and still be fine. That's emotional immunity. When you can lose without breaking identity, you've achieved true freedom. Because then you're no longer trading to feel safe, you're trading to express skill. And that's what makes the difference. In the final part, we'll bring everything together, how fear, calm, and probability form the foundation of traders' presence. A state of mind where execution flows naturally, where emotion exists but doesn't interfere, and where the market becomes not a battle to win, but a mirror to master. There's a moment every trader eventually reaches. It doesn't come after a win. It comes after chaos. After the losses, the doubts, the sleepless nights, the endless charts. A moment when you realize this game was never about the market. It was about you. When you first began trading, you thought the goal was to master the market, to find the right strategy, the perfect entry, the secret indicator. But slowly, you began to see the pattern. No matter how many systems you tested, the real variable was always the same, your state of mind. The market didn't punish you. Your reactions did. You didn't lose to volatility. You lost to yourself when you stopped being calm. That realization changes everything. Because when you understand that trading is a mirror, you stop fighting the reflection. You start observing it, studying it, learning from it. You start realizing that every emotion is a signal. Every fear an opportunity to see deeper into your own mind. And that's when you begin to awaken what I call trader's presence. Trader's presence is the ability to stay fully aware inside uncertainty. It's the stillness that remains when the market moves violently. It's the quiet center beneath all the noise. It's the point where you stop needing control and start embodying trust. You no longer chase calm, you become calm. Fear of assignment, fear of loss, fear of being wrong. All of it dissolves when you realize fear was never the enemy. It was just the teacher. It was trying to show you where your attachment lived, where your identity was fragile, where your trust was missing, and every time you faced it, you grew stronger. Fear didn't break you. It built you. Assignment volatility drawdown. These are not punishments. They are invitations. Invitations to meet yourself at a deeper level of awareness, to test whether your calm is conditional or unconditional, to see whether your confidence depends on the market's approval or your own discipline. That's the real test. And when you pass it, you no longer need the market to validate you. because you've already validated yourself. Presence is not absence of emotion, it's emotional clarity. You still feel fear, you still feel frustration, but you no longer become them. You let them pass through you like weather through the sky, unresisted, observed, understood, because you know storms don't destroy the sky. They only pass through it. The calm trader doesn't chase perfection. They chase awareness. They know that execution improves as self-awareness deepens. They understand that the external market is only a reflection of the internal one. And they treat every moment of tension as training. Every time they feel fear, they breathe deeper. Every time they lose control, they reflect deeper. They don't judge the emotion, they study it. And through that, they evolve. You see, trading psychology isn't a skill. It's a transformation. At first, you learn techniques, how to journal, how to breathe, how to stay patient. But then you realize the real transformation is in who you become through practicing them. Calm isn't what you do. It's what you are when you stop trying to control everything. Presence isn't silence. It's the awareness that listens behind the silence. That's where wisdom lives. When you've trained your mind to stay calm under pressure, something beautiful happens. Your decisions become effortless. Not because they're easy, but because you're no longer divided. There's no inner war, no tug of war between fear and logic. You act from alignment, from clarity. And in that state, even losing trades feel peaceful, because you know they're just one data point in a much larger evolution. That's the paradox of mastery. The more detached you become from outcome, the better your outcomes get. Because detachment frees you from emotional noise. It allows you to see cleanly, to respond precisely to trade. What's real, not what you fear. When you no longer need the market to make you feel safe, you begin to move with it, not against it. That's when trading becomes art. Presence turns trading into a meditation. Every click, every breath, every hesitation becomes part of the practice. You stop trying to predict. You start trying to perceive. You stop fighting uncertainty. You start dancing with it. You realize that every candle is just another wave in an infinite ocean. And you are the surfer, not the sea. When you live from that awareness, your relationship with the market changes. It's no longer a battlefield. It's a classroom. It teaches patience through waiting, humility through losses, confidence through clarity, and gratitude through the realization that this journey was never about money. It was about mastery. So the next time you feel fear rise, when your spread moves close to the strike, when your heart races, when you want to click, close out of panic, pause, breathe, whisper to yourself, this is the moment I train for, not to avoid fear, but to master response. Because calm is not found when the market stops moving. Calm is found when you can move while remaining still inside. That's trader's presence. You can't fake it. You can't force it. You can only practice it one moment at a time, one trade at a time, one breath at a time. Over weeks, over months, over years, your nervous system learns that it's safe to stay calm inside chaos. And that's the moment you become untouchable. Not because you don't feel fear, but because fear no longer controls you. So let this be your reminder. The market will test your patience. It will trigger your emotions. It will tempt you to abandon your plan. But every test is an invitation to return to presence. Stop, process, trust, not just as a rule, as a way of being. Because the goal is not to trade perfectly, it's to trade consciously. And consciousness is the ultimate edge. There will always be volatility. There will always be risk. But there can also always be calm, because calm is not out there. It's in you, waiting for you to remember who's really in control. Not the chart, not the market, but the awareness behind the screen. That awareness is the trader. That awareness is you. If this message resonated with you, pause for a moment. Don't just move to the next video. Reflect, ask yourself, what part of me reacted today and what part of me stayed calm? That's where growth begins, not in knowledge, but in awareness. Here at Mind Over Markets, we're not just building better traders. We're building calmer minds, wiser decisions, more conscious lives. So if this journey speaks to you, subscribe, share this message, and join others who are learning to master themselves before they master the market. Remember, you don't trade charts. You trade your own psychology. And when you understand that, you'll never see the market the same way again. Stay calm, trade consciously, and I'll see you in the next reflection.